Good evening all, I hope you're all well, hope you've had a great week thus far, and welcome to the Technical Tuesday. In this Technical Tuesday, I'm going to be going over an advanced concept that I've personally developed myself through countless amount of hours, through backtesting, etc., and coming up with a refinement on exactly where price reverses from. And this refinement ideally helps us to get the best risk to reward possible, and it's going to be related to the last video I posted, which was the imbalance and inefficient video, but this is going to be a bit more in depth, and we're going to take it a step further when it comes to refining that specific inefficient zone, and exactly how we can scale to a certain extent reversals. I don't really like to trade off reversals as such, but more so mitigation zones, and basically scaling in to get the best RR possible from the top slash bottom of the trend. So without further ado, let's get into this video. So the technique slash methodology I'm going to be explaining today is called the sword. It's called the sword because simply it's a liquidation zone of a specific candle that looks a bit like a sword. Again, we have a sort of handle here, we have that sort of base, and we ideally have the sword, which is the wick. The main objective for the sword and for this sort of sword candle to be validated and for me to take a specific trade on it, I will need to see these specific requirements. I will need to see previously a bullish trend. So again, we have structure here making higher highs, higher lows, higher highs, higher lows, a clean, healthy bullish trend. And to put further confluence into this, we could possibly see maybe some trendline liquidity, etc., to attract retail to be part of that bullish momentum. Upon doing so, I'd like to see an engineered swing high remain intact. So this meaning 3 consecutive candles that basically look like this, or 3 consecutive sort of wicks next to one another, and the middle one being higher than the previous 2, which indicates a shift in market momentum. So ideally, once these 3 candles have formed, we formed a swing high, and ideally now we're looking for lower prices. Upon forming this swing high, what it basically illustrates to me is there's a lot of liquidity slash stop slash buy stops, sell stops, etc. present above this high in itself. So what I'd wait for then is for that high to be purged, and purged exactly how? With this sword candle here, as this wick is ideally going to pierce through this sort of retail liquidity that contains that the retail stops, buy stops, sell stops, etc. Upon price piercing through, I like to see a bearish reaction off it, knowing that liquidity has been gained, and it's not just sort of a daily closure from a doji perspective, and ultimately we are going to continue making higher highs and higher lows. I'd like to see a clean break of market structure, this bearish momentum continue, and then ultimately upon this small bearish retracement, I'd like to see that push up to mitigate with this not really a sponsor candle as such, but it's inefficient pricing within these specific zones here. So if I just remove this tool over here, what we normally find is price don't actually respect these zones here, and what I mean by this is it don't really respect the bodies as such, as the majority of the volume is normally done within the wicks. And what we can sort of refine, this is just utilizing inefficient pricing, not considering any of the other core concept principles such as Wyckoff, etc. But this is just focusing on efficient pricing. What we normally find is there is always inefficient pricing from a 5-minute and 1-minute perspective, utilizing this specific technique here. So yeah, I'm going to be going over some specific examples on how we can sort of take trades using the sword methodology. How we can refine our entries, the 2 entry points that are valid for myself, and invalidation zone for myself, as my stop loss is ideally my invalidation zone. If it hits that zone, I'm basically out for the trade, and I'll take a step back. I wouldn't really chase the trend as such. Even if we move 300-400 pips, if that hits my invalidation zone, that basically means to me that the trade is over, and ideally we are going to continue making higher highs, etc. So without further ado, let's look at some charts now, understanding how to put this methodology into play, and hopefully you can use this in your own analysis. So now let's scale into some live examples on exactly how we utilize the sword concept in live market environments and the specific requirements I look to see before I take an entry with this specific concept. So without further ado, looking at GBP USD, at the beginning of the month, 1st of March 2021. And straight away what we can see is these equal highs, ideally engineered liquidity, also known as. And basically what this illustrates is there is a lot of stop losses from a retail perspective, buy stops present above this high here. What I mean by buy stops is retail look to go long upon a breakout of these equal highs here. So upon price breaking out, they jumped the gun too early, take the long, but really what price is doing is raiding those highs there, taking stop losses, activating buy stops, and then ultimately selling off in the opposite direction, so it traps retail and they don't have a chance to get out of their position. But nevertheless, basically utilizing exactly how the sword concept links into previous sort of liquidation zones, etc. So just fast forwarding price right now, we have that clear liquidation zone of those equal highs here slash 2 engineered swing highs here, and in doing so, as we've liquidated these highs here, we formed this sword candle on the 45-minute time frame, and again we can see that similar sword candle present on the hourly time frame. What I basically look for in a sword candle perspective is minimum body, but I want to see a large wick, and I want to see this large wick cleanly pierce through this candle here. I want to see a fail of a clean candle closure above this high here, and this is exactly what we've got. If we had a full body candle closure above these highs here, it would invalidate the sword setup for me. Ideally want to see sort of a doji candle, to say the least, but yeah, it's a lot more than a doji candle. If you actually look at this sort of structure here, we've raided this prior engineered swing high as well. So again, 2 highs have been raided simultaneously, and this is always a good thing to see. Now I'd basically wait for a structural break, so I'd be scaling into the 15-minute time frame, and again we've had that structural break here. The reason I consider this a structural break, look at previous sort of structure here: higher high, higher low, higher high, arguably that new higher low, higher high, higher low, higher high. This was the previous higher low here, seeing a clean sweep of that. Ultimately made a new lower low to a certain extent, lower high, but what I'll be favoring now on the hourly time frame, just get them annotations back, on even a 45-minute time frame, I'll be refining this sword candle, especially the wick, to look for possible entry points regarding imbalance slash inefficient pricing. So now scaling into the 1-minute time frame, what we can see present here is this inefficient pricing here. So again, all of these consecutive candles form this sort of imbalanced pricing here, ultimately form sort of liquidity here, and basically just waiting for a mitigation of that Pacific zone there. Where would my Pacific entry points be? The low of this inefficient pricing here, and the mean threshold. If you was to take this from a limit perspective, there's 2 ways to go in about it. This is the more conservative way, this is the more aggressive way. They both will give you very nice RR. I believe they're only like a pip or 2 away from each other, so 4 pips away from each other. So if you're a bit more of an aggressive trader, you can take the entry from the mean threshold, but just note that your strike rate will be a lot lower, as sometimes the position will be missed by a pip or 2, whereas if you take the entry from the low of the inefficient pricing, your strike rate will be a lot higher, and you will find you're able to get into the trades much more often. And there's 2 ways of putting these stops. Ideally your stop can go above this high of the inefficient price range here, or you can ideally put it above the last engineered swing high here. This is the most safest way to put the stops, but if you're a bit more aggressive, then you can put the stops over here. For these examples, I'm going to be a bit more aggressive and put the stops at the top of this inefficient price range here. Just dragging this across now. We'll be waiting for a clear rebalance with this inefficient pricing here, or at least the mean threshold, and then ultimately looking for bearish trades. The reason why I'm looking for a sell-off is ideally monitoring previous structure here. We've ultimately seen that sell-off after we've raided price, formed that sword candle, ideally looked into the hourly time frame, saw that inefficient pricing, and then scaled into the minute time frame to look for that further refinement. So now just sort of playing price further. So again, we get that mitigation slash rebalance with that inefficient pricing to the T, and ultimately sell off. See where price sells off. So again, smashes TP, and ideally you could have had your TP below this low here, possibly at this sponsor candle here, to create a new lower low. But yeah, you got to also look at the span this took from this whole time perspective. As if I just sort of use this data range tool, so again, this only took 2 days, so I wouldn't really be out there trying to swing the trade. This would be more of an intraday position, maybe a quick 1 to 8, 1 to 10, and I'll be out of the trade. So again, this would be enough profit for myself for me to call it a day, and ideally I would have had my TP just below this low here, and just fast forward in price now. So again, we just hit TP to the T, ideally created that new lower low, and what have we done? Also liquidated these engineered lows here. So liquidity has been gained, TP has been hit. Now we can look for higher prices on GBP USD, not as a trade wise, just from a buyer's perspective, but just fast forward in price now. So again, now we've got a clean liquidation of this prior engineered swing high here, and also this engineered swing high here. Ultimately now what we're waiting for is a sell-off from this specific candle. And look at that major sell-off. Now we understand funds, banks, all these big liquidity providers are in GBP USD short. So after rating price, the main thing slash the main order on their book from a GBP USD perspective is shorts. Now what we can wait for is a clear mitigation slash structural. First we want to wait for a structural break. Upon the structural break, we want to refine this zone here, find the inefficient pricing, and look for that to be our Pacific entry zone. So again, we have that clear structural break to, ideally this was our massive engulfing candle, this was our bearish Marubozu candle, which signifies heavy bearishness on GBP USD. Just fast forward in price now. Sell off, and again with this strategy, or with our whole strategy at Quantum, you just got to be patient. You got to be aligned with the markets. Again, as mentioned in the previous section of this video, we're not trying to jump the gun too quick. We're waiting for price to ideally come to us, and then we will react accordingly. At the end of the day, banks have to mitigate with these specific positions here, and yeah, if they don't really mitigate with these specific positions, they cannot really profit efficiently off the market. Sorry about that, trading view was playing up a bit, but nevertheless we're back, and as mentioned previously, just fast forwarding price now. So again, just monitoring exactly what price is doing. We're forming this contraction range here, building up orders, build up of liquidity. What have we got above this contraction range here? These sort of engineered highs here, which contain a lot of liquidity. In addition to that, we've got these relative equal highs, which, you know, ideally need to be liquidated. These equal highs can't really stay intact. And in addition to that, we have this sword candle here, which needs further refinement slash mitigation. Just before we see any more price action, just going to refine this specific sword candle here. So again, that minimum body is like what is exactly what we like to see, with that big wick that ideally purged through this prior engineered swing high here, and ideally this engineered swing high here. So yeah, just scaling in on a 1 minute perspective quickly. And again, what we can see in this area here, from this swing low here to ideally this swing high here, we see this inefficient pricing here. So my next entry, just based off this sword concept slash inefficient and imbalance concept, is this zone here. So this would be my entry zone. Just going to label this here entry. Put that to the right and the middle, sorry, bottom. And the invalidation zone is ideally going to be, just going to remove this for a second, the high of that inefficient pricing there. going to be my invalidation zone. Now we can scale back onto the hourly time frame. Just play price again. So again, this contraction range form now, and again you can just see how long this contraction range is, meaning the amount of liquidity that's been built. So we would expect quite an impulsive move for 3 days straight. We've just been ranging on GBP USD, and knowing the volatility GBP USD contains, we would have expected a lot more price action than just this. So just sort of fast forward in price. Again, we have that bullish rally again with this massive Marubozu candle that's ideally liquidated all of these prior engineered swing highs here. We've got clean liquidation of these relative equal highs here, so it's a good indication that we are going to see higher prices towards our specific areas of interest / entry. I'm just going to refine this with the RR tool quickly. So again, our entry would be at this level here. This is more conservative point of view, and the stops from aggressive point of view is going to be here. So 2.9 pip stop, and ideally we would use things such as market structure and other core concepts to ideally utilize a specific take profit. But what we're basically monitoring in this video is exactly how sponsor candles work and the specific levels they react off. So just fast forward in price again. Again, we have that next purge in liquidity. So as we're sort of rallying to our specific short position, what we could do is look to go long at our specific area of interest. And what do we see here? We have a stop run below these relative equal lows here. Upon that stop run, we have that bullish rally done what? Broke previous market structure, had that pull back to where? To this area of interest here. And just getting in from a 1 minute perspective. Or 5 minute. So again, we can see this whole area here was inefficient pricing, and where does price react to? From a bullish standpoint, we'll have to mark the high of this inefficient pricing here, and the mean threshold as our entry zone. So again, if you're a bit more aggressive, that would have been a very nice risk to reward trade. You could have capitalized from a long perspective. If you're a bit more conservative, your entry would have been here, and stops would have to been at this level here. But nevertheless, it's exactly what we outlined, in the sense we want to wait for a stop hunt, see a bullish reaction, ideally break a structural high or two. Upon that, give us that pullback into that inefficient pricing, and from a bullish perspective, take the entry either at the high or the medium threshold. From a bearish perspective, take the entry from the low or the mean threshold, and stops would have to go from a bullish perspective at the low and from the bearish perspective at the high. Nevertheless, just getting back onto the hourly time frame. What we can also see is another sword candle has been created. Why do I consider this a sword candle? This is actually a stronger sword candle than the previous one. The reason I say that is because this was more aggressive, as we had a stop loss hunt upon raiding. Arguably, this was the first structural break on the hourly time frame, and then a pullback. Now this is our second structural break, and this candle does indicate a lot of buying pressure, a lot of contracts, just by sort of the visibility of this Marubozu candle here. So yeah, we haven't really had a prior mitigation of that candle to a certain extent, and we know candles like this, these sword candles, there is a lot of inefficient pricing just below it. So we'll focus on that as price gets there, but nevertheless, focusing on this example here, playing price forward, and just look at that to the absolute T. That inefficient pricing zone that we mapped out on the 1 minute time frame. I'll just zoom in here. We get an entry both from a the low standpoint / conservative standpoint, and the aggressive standpoint / mean threshold standpoint, and sold off aggressively. And these are the trades we ideally want to be in, guys. You don't want to be in sort of contraction ranges like this, and see your MT4 floating between blue and red, constantly between blue and red, profit loss, break even, profit. It's just first of all, it's not entertaining, and secondly, it's very dampening from a psychological perspective, as you're constantly determining whether to close that trade and call it a day, or do you wait for your stop to be hit because maybe the news might come in the next session, etc. Especially when we're consolidating for 3 days straight, you want to really wait for opportunities like this and intraday opportunities like this. So maybe a bit more risk can be applied to these moves here, and you can reduce your risk on these sort of moves here. So yeah, upon price reaching these areas of interest, you can look to refine and react accordingly. And again, just removing this RR tool there, and just playing price. So again, we see that next sell-off, and to a certain extent, I'm just going to move this across here. To a certain extent, I would consider this as a sword candle. Again, I'm not really fussed about if it's a bullish or bearish sword candle. I ideally want to see minimum wick, minimum body, but maximum wick on a Pacific side. Again, we have a wick on both sides, but what we're basically focusing on is the inefficiency. We can see with this big bearish candle here, this prior inefficiency has been rebalanced with, and if I just extend this zone here, we can see with this wick as well, all of this price range is efficient. This price range here isn't efficiently traded, so that's what I'll be awaiting next. And if I just sort of zoom into that Pacific range, I'm just going to remove this to a certain extent, so we get a clear white we get a clear white background, and exactly what we're looking for on the 1 minute time frame. So again, we have liquidity present over here, relative equal highs, etc. In addition to that, we do have this inefficient pricing here that all needs to be rebalanced with. We have that rebalance over here, as the sell side and the buy side had been delivered efficiently. So within this sword candle here, our entry zone will be ideally here for conservative entry. And for an aggressive entry, we'll take out the mean threshold of that range, and our invalidation zone will be the top of that range there. Just going to move that back into the mean threshold, and yeah, now we'll scale back onto the hourly time frame to see how price reacts to that Pacific zone there. So what we could do is add additional short positions on as we're holding this position here. So again, just that in itself is arguably a 1 to 51, but just seeing how far price goes. Fast forward in price now, sort of formed relative equal highs here, considering this wick as well, these relative equal highs. I want to see a clear liquidation of that zone there. Look at that to the T, wicked into that inefficient pricing, and you can, again, as mentioned previously, these sort of bodies of the candles don't really be respected, as previous mentors tell you the majority of contracts being dealt, the majority of volume being illustrated in the market from a fund perspective and bank perspective is done through the bodies. To a certain extent, yes, but when you're looking at these candles here that ideally created previous manipulation or have traded to a certain extent efficiently before, there is still inefficient pricing present within these sword candles here, and we can look to take very favorable entries there. Again, both entries targeted, and what you can also utilize is possibly 2 entries. So again, you have 1 conservative entry from a short position, and you have another aggressive entry on a short position. And the reason I recommend doing this in this specific example is because if you're already in that short, and you're ideally 51% up, you can, take a bit more risk, in the sense you can have two trades at one level, because if you really lose both of these trades, risking 1% on each trade, you're really losing 2%, which will leave you at a 49% profit, all in all. So yeah, it's definitely worth the risk, and just knowing this is a 2.6 pip stop here, 5.3 pip stop, and again, you're just sort of trading with the trend, as we know. Just from this manipulation here, funds have heavily shorted just through not only this manipulation but this price action here. So we expect a mitigation within that sword candle there. Upon that mitigation, ultimately sell off exactly where, in alignment with this whole trend here, and arguably possibly take out these equal lows. We will see how price sort of shows itself as it trades further. Could actually be looking for very nice RRs. I'm going to delete these lines for the time being, as I don't want the charts to be clustered with different lines and us not knowing exactly which one we are looking for. But just understanding that this wick did come to fruition with this sword candle here. So exactly where is the next move going to take place? So we've seen a raid of this engineered high here. So we could actually be forming another sword candle upon taking an entry of a sword candle. So you can see how they correspond with each other, just like dominoes. Upon it reacting off one, it forms another one here. And ultimately what we've done over here with this candle, we formed another sword candle off reacting of a previous sword candle. So again, what do we have here? We have that small candle body, minimum wick from the sell side, but the maximum wick / the blade of the candle is the longest part of the whole candle. So again, this is 2-3 times the amount of the candle. Just looking at this from a range perspective, so again that took 7 days, ideally nearly a whole week, heading into 2, just for this mitigation to occur and this sell-off to occur. So we can expect the next sell-off to be quite aggressive and vigorously sell off. Just fast forward in price now, see that sell off. Ideally that's what we expect. Looking at this on a smaller time frame from a structural point of view, again we've took out that prior higher low here, higher high arguably, or if we just look at this on a 5-minute structure, arguably higher high, higher low, higher high, higher low, higher high, higher low, not really higher low there. This was the last higher low here that made the initial higher high. I ideally took out these engineered highs and completely swept them. Upon taking out that higher high, we've ultimately sold off quite aggressively, took out this previous higher low, ideally to a certain extent broken market structure. Now we will look to refine this 1 hour sword candle that ideally took out this previous liquidity here / engineered swing high here on a 1 minute time frame to understand the inefficient pricing that's going on within this area here. So again, looking at this, we have this whole inefficient priced candle here. So again, that's a one candle in itself. I'm not really worried about these wicks here, as we didn't actually come close to the mean threshold. So again, from a seller's perspective, the entry would go at the low of that candle there, from a conservative viewpoint, and the aggressive viewpoint will be at the mean threshold. My invalidation zone will be the top of that inefficient pricing there. Scaling back onto the Audi time frame. Just fast forward in price now. Again, we have another bearish candle. Good indication that we are going to see a strong sell-off upon price reaching this specific area of interest. Another strong bearish candle. Seen that bullish momentum. Possibly just look to take out this sell side liquidity here. Upon taking out the sell side liquidity, maybe use that bullish momentum to see higher prices. Look at that to the T. Unfortunately, we would have got stopped out just by the wick on that specific setup. But as mentioned at the previously on this video, at the beginning of the video, you can also put stops at the top of the swing high to be a bit more conservative with your trade. But nevertheless, if you're holding shorts, this was just more of a refined viewpoint to get into the market / in sync with the market, and to ideally stack your positions to gain the most RR possible. But just see how price reacts at this level here. Again, we sold off straight away. Yes, we did get stopped out from our high RR risk to reward perspective. Just going to delete this for a second, but just going to monitor how price exactly reacted off this sword candle here. Again, we reacted quite bearishly in saying that we formed another sword candle here. So again, I like to see these sort of wicks here, as long as it's got a good wick to it. Yes, we do have a big body to a certain extent, big bodied candle, but something we can still work with. Again, price trading back up, created this sort of liquidity here, these relative equal highs. Let's look to further refine this candle here on a 1 minute time frame. So again, we've seen that inefficient pricing rebalance with there on a 1 minute time frame. See that sell off. I didn't really create too much inefficient pricing except for this range here. Rebalance, sold off, had that small retracement, sold off. So the next inefficient pricing for myself will be this area here. Again, that is a very tight range, so stops will have to go possibly above this high here, which is the next swing high here. So entry would probably go at the mean threshold. A stop to go at the high of that engineered swing high there. See how price reacts off this specific sword candle here. So again, on the 30-minute time frame, that sword candle does look good. Sorry, 45-minute time frame, that sword candle does look good as well, and something we can look out for. Just fast forward in price now. Create some more inefficient pricing over here, and this also works from an inefficient pricing point of view. So again, if we wanted to sort of hedge our position going into this area of interest here, we could look for possible entries within this whole inefficient pricing here. So again, on the hourly time frame, we can see this is just all inefficient pricing. And how would we actually refine this specific area? Well, you could refine it by just taking the entry on the mean threshold and the low of the candle. You know, arguably within that range there. But if we actually scale it into a 5-minute time frame, or even a 1 minute time frame, just gonna lock this. Yeah, it's locked. But just looking at sort of this price action here, we sort of had this inefficient pricing here, arguably rebalanced with this candle here, but I wouldn't really consider this as inefficient pricing due to this previous price action to the left of it. Just scaling at future price action, we do have this inefficient pricing here, as there was no price action to the left of it or right of it. Had that push up there, ultimately had that sort of small sell off. Not really no significant inefficient pricing here. We did have that small gap, but that was not really valid due to this previous price action here. And yeah, ever since then, the business all in this area had been done. So again, this would be the main area of interest I would look to react off, and the entry would come at the top of that candle there. And the more aggressive entry would go at the mean threshold, and the stop will go at the low of that specific candle there. And that is for possible longs. Just going to delete these lines just to avoid the confusion. But ideally, this is our refined viewpoint on the inefficient pricing zone. Just waiting for price to ideally trade into this zone firstly, and then let's see how it trades. So again, this is a good indication from a structural point of view, as we've taken out this prior engineered swing high slash market structure. Ideally these highs here, and ultimately we formed higher high, higher low, higher high. So we know there is a large amount of buy contracts visible on GBP USD from a bank's perspective. Ultimately would have got stopped on that one as well, as we've ideally just nearly took out that high as well, formed relatively equal highs. So yeah, that would have been the best setup, but just scaling along. Notice we did get a reaction afterwards with this specific sword candle here, this large wick with sort of the small body to a certain extent, engineered swing high that ideally took out this possible high here. Upon taking out that high, we've had that mitigation. Possibly look for a refinement within this, or just quickly look for a refinement within that area there. And there wasn't, to a certain extent, there was a small gap there. This inefficient pricing had already been rebalanced with this wick here and this wick here. Ideally all rebalanced with here. Had engineered highs here, so again that was probably a clean liquidation of an engineered high. I reacted off a Pacific sponsor candle, but in saying that, there was no inefficient pricing there, so I wouldn't have taken entry on that. That would probably been a 1% loss in that example there. So again, just playing it as it is, and just looking at every single sword candle present from the 1st of March to current price right now. Just playing price again, just look at that to the T. So again, if you took a 1% loss on this setup here, just look how clean this one is, and that was a refined viewpoint from a whole inefficient pricing here. So again, people will look at this whole zone here and they'll just get a bit anxious, in the sense that if you were to take an entry off it from a mean threshold point of view, and stops would have to go below here. Yes, you would have got in the trade, but look how big your stop is. That's arguably 13-14 pips, whereas you could have reduced it to, ideally from a conservative entry viewpoint, 1.4 pips, and price would have activated it nicely, including spreads, etc. And look at that impulsive reaction you would have got out of that trade. Ideally this area here has already been mitigated, so just gonna rebalance with, so just gonna remove those lines to avoid confusion. But the business with those areas have already been done. But just look at that, within 1, 2, 3 hours you would have been 1 to 84R in profit, and I don't know about you, but that is a phenomenal return, especially on one trade, arguably in an intraday position. So yeah, you could have actually put a limit on that. You know, if you're trading FTMO, maybe 0.5% risk, and yeah, you would have broke the rules there and then. If you want a personal account, maybe 1% risk, 1.5% risk, just still using a low amount of risk, and yeah, have that very nice RR setup. Again, to a certain extent, this is a I would consider it as a medium probability setup, in the sense that you can see we are aiming for pure accuracy. We want to call the pip on the low and the pip of the high. In addition to that, we're doing it via understanding exactly which way the majority of contracts, the funds, the majority of volume, the funds are in a specific currency pair. So for example, upon a raid, we know the majority of volume was from a bearish perspective, as we were making lower lows, lower highs, lower lows, lower highs. But as we had this sort of structural break here, and this impulsive sort of bullish momentum here, we could understand now we could possibly be looking for a hedge position if this short was valid. And ideally, once we're hedged, that's the perfect scenario, as we're basically risking minimal on our next position. But that's a whole topic for a whole nother video. Again, my next area of interest will be this specific sponsor candle. As price gets into that, why would it be this specific sponsor candle? So again, monitoring as price sort of rallies from our entry. We have this liquidation zone here. So these relative equal highs, sort of a high here that needs to be liquidated. And yeah, this is ideally my next sword candle. I'm just going to sort of remove this for a second, or I'm just going to delete. Actually, no, I should leave that on. But just going to refine this zone quickly here to the minute time frame. There it is. So looking at this on a 1 minute time frame, again we can see the real inefficiency within this whole zone here is these candles here, these two candles here, as there was no prior price action to the right of it upon actually selling off. So again, the buy side had been delivered, but there was, sorry, the sell side had been delivered, but there was no buy side to go with price. In addition to that, we do have these engineered highs on a 1 minute time frame that need to be liquidated. So I'd consider this as a valid zone to get short from. Again, from a aggressive standpoint, looking at the mean threshold of this sword candle, from a conservative viewpoint, looking at the low of that inefficient price range there, and for an invalidation zone, looking at the high there. So again, guys, it's not always going to work for you, but it is going to give you very high probability setups that could, give you a very favorable RR if you use it in the right manner, following all the rules as illustrated, and yeah, basically gaining the most RR possible. Just going to fast forward price now, just quickly, as we've covered all of this prior price action here. Beautiful reaction to that limit there. Again, I believe we were sort of over here. Just going to force forward price like this. Again, yeah, just looking at that to the T again, activating both the conservative viewpoint and the aggressive viewpoint, and still remaining that invalidation zone to the pip. So yeah, and where does price come? Literally in the wick. If you were to take a short from the body and get sort of baited by this wick here, you would have got stopped out quite aggressively with this wick. But yeah, nevertheless, we've wicked into it, had that aggressive set off, and as mentioned previously, these are the sort of trades we want to be in. As price reaches our limit, literally wicks into it and then sells off slash goes in our favored bias in an impulsive manner. Now just fast forward in price again, came sort of close to our entry again. Small sword candle here, but I wouldn't really consider this due to the size of the body of the candle, especially on the hourly time frame. We do have this inefficient pricing here, which we could see in a reaction off. Just fast forward in price, or this whole sort of level here, seeing how price reacts again. Again, we have a rebalance to a certain extent of this whole inefficient pricing. We do have this inefficient pricing that's still left. Relative equal highs here that need to be liquidated. As price liquidates that, these engineered highs here, we've rebalanced with price. Ultimately, now we expect to sell off, which we got, and saw lower prices ever since. So yeah, that's just a little bit about the sword candle and one of the methodologies that we use in the community. Again, there's a lot more videos to come, small gems like this. Again, this is a very small gem of our arsenal, but yeah, upon it coming time for war, which is literally, when you're in the markets, you're in war. You're in war not only with the banks, the funds, etc. You're in war with yourself. You're fighting your ego every day. You're fighting your bad habits. You're in war with trading, and people think it's a light subject to go into. Hence why the reputation on the forex industry is overlooked too much, because to be consistent in this market is one thing, to get high RR trades and to do it on a consistent basis is another. And just utilizing methodologies like this, it makes the whole process a lot more simpler as we're waiting for price to come into our favored areas of interest, because we know what we're looking for. We know what we're looking for from a fund perspective, bank perspective. We're just waiting for them to ideally show us their hand, and we will react accordingly. That will be it for the Technical Tuesday. I hope you enjoyed it. Hope you found some value out of this. If you did, backtest, the hell out of this Technical Tuesday. I want to see some chart illustrations in the members chat, and ideally I want to see you sniping some nice RR trades using this methodology. If you do have any questions, feel free to hit me up via Telegram or Discord, and we can discuss that further. Thank you very much, and I hope you all have a good day.